Hello and welcome. My name's Chris Can with Mining Journal, and with me I have Paul Atherley with Pensana. Pensana is a rare earth element development group focusing initially on its primary project, Longonjo in Angola, but with one eye on a downstream processing hub in the north of the UK. Welcome, Paul.
Thanks, Chris. Good to be here.
We've got three interviews we're doing with you, Paul. Today, we're hoping to focus on the financing. Can you talk us through the capital cost of 217 million and your current plans to get this away in the market?
Yes, obviously a very challenging time in both the equity and the debt markets at the moment, Chris. But so earlier this year, about 9 months ago, we addressed that by reducing the upfront capital cost for the project from well over $300 million. We completely re-engineered the project so it can start off with a capital cost of around $200 million. And delighted the capital costs have come in at around 217, and that includes a $20 million contingency, which isn't bad in this incredibly inflationary environment. So we're very, very pleased that we've nailed it around that 200 mark. That enables us to progress the financing.
Okay, and the different investor groups that you're looking at, obviously gone are the days where you do half in equity and half in debt from commercial and from capital markets. What's it look like with the kind of strategic elements as well?
So that's right. We're very fortunate that we've had two big shareholders, our major shareholders, the Angolan Sovereign Wealth Fund, FSDA. They, along with M&G, those two shareholders, between them have put the best part of 70 million US dollars into the company over the last 2-3 years. That's brought us to the point where we can do the main financing. So very, very fortunate to have strong shareholders. And also, if I could add, I put in around a million US dollars myself. So very, very strong supportive shareholders of the project is able to get to this point without having to go back to the equity market in these very difficult times.
Okay, and just for clarity, how far does that get you in terms of the milestones you're looking to tick off?
We're at financing as we speak. So we've completed all the engineering work. We've had a technical review, and we're now working with the financiers and have been for some time on basically finalizing what we call the term sheets to be able to get sign off across a number of groups that are going to give us the $200 million.
Okay. And once this is completed, out the way, executed, and you're very happy with the process, what happens next in terms of looking ahead, particularly at your UK plans and that downstream facility? How's that going to be financed?
So the priority is Longonjo, and we've drawn down $15 million of that $200 million, and we're spending it on the ground at the moment. So there's a lot of activity on the ground. And then we're aiming to get into main construction by around May of this year. And then it's a 12-month build with around 6-month commissioning for Longonjo. Once Longonjo is financed and up and running, that is financed as in up and running in terms of construction, then we turn our attention to Saltend. And Saltend is this separation facility that we've got fully engineered, fully designed, ready for financing at the Saltend Chemicals Park in the Humber Freeport in the UK. So basically, it's get Longonjo financed, get it under construction, and then once that's away, we can then look at the financing of Saltend.
Okay, and in terms of that particular project or that particular part of the integrated project that you're working on as a whole, what's the difference in the financing arrangements that you're expecting from a raw materials project to a downstream project?
A really good question. So there's a different set of financiers for Longonjo to Saltend. There's a lot of interest in Saltend. It's a chemical park in the UK, supplying high quality customers and very, very attractive financing proposition. We're working with a group called ABG Sundown Collier. They've essentially arranged a green bond ready to be issued, which will cover around $150 million of the $250 million capital cost. And we're working with a number of others to provide the additional $100 million, the equity piece to go alongside the bond. And again, Chris, the key there is we don't have to go back to the equity markets for any of those components. We're in a position where each of these assets in their own right are very, very financeable, what you and I'd call privately, that is not funded via the public equity markets.
Well, that's all we've got time for this discussion, but we are going to touch on Longonjo and the financing and the actual details of the UK hub in a separate interview. But thanks so much for your time.
Thank you, Chris.